Hello and welcome back to the Rekt Capital channel, and welcome to today's video update about Bitcoin. It's been a spectacular few days for Bitcoin. Bitcoin has really pressed towards the upside, ending its rally for now at 9,400 roughly speaking, which is essentially the target area that we've been talking about in yesterday's video and for the past few months. But as you guys know, I was bearish below 7,250 when we were at that resistance for 6 straight weeks without pressing to the upside. So I was anticipating a major low from there because of course 9,300 was possible. I knew it was possible, but I didn't think it was probable until we broke past this level. So although I may have been wrong about this stronger rejection and another major low following through on that, I was right about what happens next after breaching this very key level, this very strong resistance, and that is a rally to 9,300, roughly speaking, the black diagonal of this triangular market structure. And we got that, a picture perfect retest of this level and a rejection to follow suit as well. So a return here was very much on the cards, and this is a scenario that I introduced on March 16th when we saw that tremendous sell-off to just retest what is essentially, I'll showcase this chart to you guys in a bit more detail in just a second, but essentially speaking, we saw that crash all the way to 4,150, even delving a little bit deeper, and that was essentially a retest attempt of this ranging period, after which we've seen a breakout towards the upside to 13,900, followed by a pullback and a retest attempt of 4,150. Now, this chart has since evolved into what you guys see as a return to 9,300, so it was a scenario that I was very much open to. However, as I always will stress to you guys, 7,250 was that level, was that very key level for me. I thought we could see a rejection from that level, and I have no problem admitting that I was wrong here, but of course I was open to further continuation past this point and leading up from this retest point over here, 4,150, and getting above the 200 weekly exponential moving average, which is a very important long-term gauge of investor sentiment. So we got that retest attempt. It was a fantastic retest attempt because this is generally what you see in breakout plays: a breakout, pullback, retest attempt, and then a trend continuation. But we've seen this on a macro scale from the end of 2018 to now, basically speaking, to mid 2020, really. So it's been more than a year and a half of this sort of movement where we saw a breakout, a pullback, and a retest, and now we're seeing the trend continuation, which I believe may be very much over, at least in the short term. And I'm going to talk to you guys a bit about that, why I think that way. But I'd like to talk to you guys a bit about this journey through the triangular market structure, because this is, of course, from my thread on Twitter, and you can check it out at any time. I actually updated it today with the most recent chart to 9,300, but essentially speaking, we saw a lot of sell-side exhaustion over here. This was a very strong sell-side candle, which was stronger than any of the previous candles, really. So this was a very strong indicator of sell-side exhaustion after that historic crash, and we actually saw a bit of relief in this candle, but it was all about making itself above the 200 weekly moving average, because that was a very important thing to shift our directional bias for a more bullish stance. And we got a initial rejection from that 200 weekly moving average over here, but ultimately as the thread progresses, and you guys can pause this at any time if you'd like to read it in a bit more detail, my remarks in mid-March and whatnot, we saw the next day, we saw a rebound from the 200 weekly moving average, which was a very good important step for long-term investors, but we ran into that 7,250 level for 6 straight weeks, which was really a pain because that was the level that really caused a lot of confusion for traders on crypto Twitter, and I wasn't the only trader who thought would see rejection from this level, and so it was a very difficult call to make. But having said that, 6 straight weeks at resistance just weakened that resistance, and we saw a break past it, and ever since we saw that break past this level, it was much easier to just wrap our heads around it and switch to a directional bias that was more bullish in any case. But now we need to focus on what happens next. what happens next, because let's just focus on the last time we saw rejection from this black diagonal resistance. We saw rejection over here, and of course wicking past this resistance is common, and we've seen rejection over here and a pullback every single time. So it's very important to just bear in mind that we might see a rejection from here going forward, and it doesn't have to necessarily be a short-term dip. It may not even be a dip. It will just be a retrace going into the halving or after the halving. And the reason I mention a retrace has a lot to do with what we've seen in the past in terms of Bitcoin's halvings and its effect on price. So here is halving number 1. We saw a 50% retrace. This was the pre-halving retrace. And then we saw a recovery, but then again a pullback, right? You saw this sort of sinusoidal price action where you saw a bit of upward movement, a bit of downward movement, a bit of upward movement again, and then consolidation before really taking off. So we also see a very strong retrace, pre-halving retracement 38% this time round prior to halving 2 right over here. So a pre-halving retrace in halving 2 happened just before the halving and going into the halving as well. But afterwards, we saw consolidation. Of course, this was a rebound, consolidation over here, and then a recovery, and then not too smooth of an ascent, but nonetheless an exponential one. So just to bear this in mind, a pre-halving retrace does happen, and I think that if we just look at this crash, that could have been the pre-halving retrace, but it's just turned into something totally different because it's been a more than 60% retrace. I think that was a 70% retrace, if I'm not mistaken. You guys can correct me on that if you like, but this was a very strong retracement, and you could argue that that was just a correction to just end this bull market. So we could just think of this correction as the end of this bull market. So now that we've seen that bull market end and we've seen a retest of the top of this ranging period, which started that bull market altogether, we are seeing a recovery now. And if we just classify this as a pre-halving retrace, much like we saw over here prior to halving 1 and over here prior to halving 2, what we need to now look at is the rebound, right? The rebound after that pre-halving retrace, and now the topping out prior to the halving, and now a pullback, right? But it's not going to be a very strong pullback, not a pullback like this one, not like the pre-halving retrace that we've seen prior to halving 1, 2, and even 3. So this next pullback is going to be less sharp, but after that pullback we'll probably see a further upside and then consolidation before we really take off after the halving. So we're probably going to see a lot of consolidation after the halving, but fear not, that is only a gateway to further upside. So this is the pre-halving retrace prior to halving 2, and once we see a recovery here, you see many weeks of accumulation before we finally take off. So just to put this into perspective, we could see a pullback. It doesn't necessarily have to be sharp because it could hang about here for a while, but in any case, heading into the halving, I don't expect more upside because we are at a resistance. And of course, guys, I'd love for Bitcoin to breach past this triangular market structure. That would be fantastic. That would be extremely bullish news. Just a weekly close above this structure, that would be the most bullish thing that we can think of, but I like to be a bit more conservative, and I like to adhere and respect historical tendencies in Bitcoin's price and just talk about what's actually realistic, because of course it is possible that we will see a breakout past this black diagonal, not necessarily now but in the future. But is it probable for Bitcoin to break past this diagonal right now? So I am saying it's not necessarily probable. It is possible, but it's not probable at this time, because as we take a look at the historical tendencies, a pullback is definitely on the cards, and whether that pullback happens now or beyond the halving slightly doesn't necessarily matter. It doesn't necessarily matter what the time is relative to the halving. What matters is the technical price positioning, where we see Bitcoin at this resistance and overall where it's positioned in this structure. So it is quite possible that we could see some coiling in towards this structure, and we'll talk a bit about that in more detail in a moment. But at the moment we have to focus on this upcoming retrace, because you have to also bear in mind we've seen a lot of FOMO here, and especially in this recent week. And this FOMO is essentially people FOMO buying into the pre-halving pump. And people want to buy Bitcoin right now because now they're thinking about the halving and it's an event that they can buy into, and they want to buy the hype and then sell the news. So we're probably going to see a lot of selling the news going forward. And as you guys know, I've been talking about this for months now. It's a fundamental shift in Bitcoin's protocol. The Bitcoin halving isn't an event that you'd want to sell. Of course, we'll be talking a bit about this going forward, because the altcoin hype cycle, those are the events that you want to buy the hype and sell the news, because these altcoin hype cycles come in waves, and we see hype and then we see corrections. So those are the sort of fundamental analysis updates and developments and news that you want to buy the hype and sell the news on. But when it comes to the Bitcoin halving, it's a totally different ball game. Bitcoin isn't an altcoin. Bitcoin has a fundamental shift in its protocol, and that's why we're probably going to see exponential price appreciation post halving. So we have to treat Bitcoin very much differently. That's what history suggests to us, and altcoins are the ones that you should buy the hype and sell the news on. So this buy the hype, sell the news behavior is going to contribute to the pullback that we have yet to see on this rejection. So that's just something to bear in mind when considering the halvings. So this is just what I talk about in the latest tweet, that it isn't an event that you should buy the hype and sell the news on. Investors will do it anyway because it's an emotional decision to FOMO, an emotional decision in any case. But why a retrace isn't out of the question is because of this very fact. Buy the hype, sell the news. People selling right now after having a price appreciation, people FOMOing right now, that's one part of investors that will be going into Bitcoin buying the top. But the other part, of course, has enjoyed some price appreciation, and they're going to be selling the hype right now. They're going to be selling the news very soon, if not right now. But whatever retrace now occurs, this is historically proven to be a bear trap. It's just either to shake you out of your position or to just instill enough fear into the minds of investors so that they don't want to buy Bitcoin because it's going to be at a lower price. And that's where this bear trap really comes into play. But we have to bear in mind, guys, that this is a bear trap because this happened later. This is a bear trap right over here because this happened later, and the same thing is going to be happening over here. We have this recovery, but we're probably going to see a pullback going forward, and I'm going to talk about certain levels I'm going to be watching for. But once we see this pullback, we're probably going to see a breakout from this triangular market structure, and that's going to be fantastic news because that's going to confirm a new bull market. And whether we're in a bull market right now or not, that doesn't necessarily have to be answered, because what we have to think about right now is that this triangular market structure is compressing price from this area and from this area. So we're seeing a lot of price compression in towards the apex of this very important structure. And once we see enough coiling into the apex, an apex precedes a breakout or a breakdown, right? But I feel like we might see a breakout based on what we've seen historically because of the halving. So let's talk about a few of the levels, but before we do that, we have to celebrate Bitcoin closing above 7,250 on the weekly, because this is what enabled a fantastic rally to 9,300 in just a few days. And I am celebrating this really monumental technical development in price with a giveaway of a few discount codes to my TA course, and they're running out right now, and I am going to end the giveaway on May 1st. So if you'd like to just check out the course, learn how to do this yourself, because everything I talk to you guys about is in that course, broken down step by step from the very simple principles to the more advanced ones as you go through the course. The course has been rated as a 5-star course, which I am really proud of. I'm only about producing high quality content and sharing it with you guys. So if you'd like to level up in your trading and your investing, Keep tuning in to these YouTube videos, of course, because I just showcase to you guys what I showcase in the course. So if you like these YouTube videos, you'll love the course. Make the most of this giveaway and use the discount code today, because tomorrow is the end of the giveaway. But let's dive into a few levels, and you guys are familiar with this monthly range right here. The range high, the mid-range, the range EQ, and the range low. So this is 7,770, 8,500, and 9,300, roughly speaking. And 9,300 is, of course, confluent with the top of the diagonal right over here. So that's fantastic to see that the monthly range, along with this macro triangular market structure, there is a lot of confluence there, and we are seeing a shooting star rejection candle. So this is definitely not something you want to see if you want to be a buyer. Definitely don't FOMO into this. But in any case, moving forward, let's focus more on the short term, because in this video I've been taking a more macro view, a more zoomed out view. So where can we expect a pullback for Bitcoin going forward, provided that doesn't break out from this range right over here, so that it doesn't break out from the 9,300 range or past the black diagonal resistance from the market structure right over here? It's possible, but not probable at this time, as I mentioned to you guys. So let's assume a pullback is going to happen. It is the likely event. So what can we glean in terms of levels to look for on this pullback? Well, it's very simple whenever we think about this macro monthly range. 9,300 has been the range high that has rejected price, and after this really strong FOMO, we're going to see some rejection from this resistance. And the thing to think about is this range EQ. This range EQ, 8,500, is going to be the next level of support. And the way to think about this is either Bitcoin is in the upper half of the range, or it's going to be in the lower half of the range, right? So as long as we're above 8,500, then we're just going to see consolidation. We're going to have movement in the upper half of this range. Very simple. But once we confirm a breakdown from this range EQ, we're going to see price now descend into the lower half of this range, the lower half of this monthly range. So that would be 7,770 to 8,500. And you have to, of course, bear in mind that this 200 daily exponential moving average is a very important reference point for price as well, but it is confluent with this range low, so it is the same level, roughly speaking, right? So this is around 7,800, whereas the range low is actually 7,750, roughly speaking, just to be precise. But in any case, that's how I think about price. First, this upper level, this upper half of the range, and then if we break down, then this lower half of the range. And of course, if 7,770 doesn't hold, and that has been the case in the past, then of course, guys, we go back to a level that has been a very key level throughout history, but also most recently as well, 7,250. And if we get a strong pullback like that, we know that this level is a strong resistance, but has it been a strong support in the past? Well, it has, right over here, right? We've seen a strong support in 7,250 before, but of course we've seen wicking and even candle closes below here. So it could be a very interesting price situation once we get to 7,250, if we get that, of course. And the reason that it's possible is that we've seen a breakout past 7,250 and then a nice trend continuation, but we actually haven't tested this level into a support. So it is a level to watch out for. And to just bear in mind that we could see some wicking, that could really provide a financial opportunity that would be really fantastic. It could yield a fantastic return on investment after the halving. So that's something to bear in mind. We have to assume at this point in time that Bitcoin is going to meander within this top half of the triangular market structure, because if we conceptualize this market structure as a whole, it has two parts, right? And they're not necessarily equal in how big they are, because this upper half of the triangular structure is much smaller than this one over here, right? So it's interesting to note that, but at the same time, we have to also bear in mind that this triangular market structure is going to be where Bitcoin's going to be meandering in the short term as long as it maintains itself above 7,250. So that's my sort of thought process in a bit more detail about what I'm thinking about when it comes to Bitcoin's price action going into the halving. So I have mentioned to you guys my thought process for Bitcoin's price action going forward, but I'd like to wait for this monthly close to just confirm that this is indeed a bullish engulfing candle. If price closes like this, it will be a fantastic development. This is very bullish, just to see that we've recovered this crash and things are back to normal, essentially speaking, going into the halving. So I am waiting on this monthly close, but in any case, we have to think about the money flow cycle. The money flow cycle in crypto starts off with fiat. It goes into Bitcoin, and once Bitcoin enjoys its rally, it goes into large cap altcoins. And as you guys know from yesterday at least, Ethereum and Litecoin have been the beneficiary of Bitcoin's recent rally. They've been rallying together, roughly speaking, and Ethereum and Litecoin will probably continue to do well, even if they need a small pullback in the short term. The money flow cycle suggests that we're going to see money flow into large cap altcoins, so definitely check those out. Keep an eye on the large cap altcoins going forward, because they are going to be a precursor to mid cap and low cap altcoins, which will rally with the altcoin hype cycle that is yet to come, right? So just to conceptualize the money flow cycle in a bit more detail, and I'll make a video about this just to really go into the nitty-gritty details of it. Fiat goes into Bitcoin, into large caps, into mid caps, low caps, and then low caps are the final piece of the puzzle. They are the final stage in the money flow cycle, and these are the coins that rally the most. And after those rallies, we see movement of that capital back into Bitcoin and most likely into fiat. Sometimes we see continuation in Bitcoin's rally for the money flow cycle to just repeat all over again, but generally speaking, over the past few months, we've seen Bitcoin go into fiat. But because of the halving, who knows? We could actually see this part of the cycle really become the predominant one. So we probably could see this sort of repeating money flow cycle going forward. But we'll talk about that in a bit more detail going forward. Let's talk about this briefly, about the altcoin hype cycles. Today I'm going to be publishing later on an article that talks about the altcoin hype cycles in more detail, and I'll showcase to you guys all the tools that I use, what I look at, what tools I use when it comes to deciding which altcoins to buy, and how I just navigate altcoin hype cycles. So an article is coming out later today, so definitely check that out, because I'd like you guys to leave some comments, some ideas, some questions about the altcoin hype cycle. If you have any questions about the article, leave them in the comments down below, and I'm going to be covering altcoin hype cycles, the article, in more detail in tomorrow's YouTube video. So lots to look forward to, the article itself, the video tomorrow. But for now, I hope you've enjoyed this episode. Please consider dropping a like, of course, and subscribe for more videos if you haven't. Thank you so much for watching today. I'm Rekt Capital, and I'll speak to you soon.